Hello and welcome everyone to the week ahead commodity report for the 1st to the 5th of April 2019, presented by myself, Phil Carr, at the Gold and Silver Club. And of course today we will be reviewing gold, silver, platinum and crude oil prices for the week ahead. So first of all, we've seen gold gain here on Friday, en route to its second quarterly rise as the dollar eased on Friday off the back of softer US economic data. We've also seen hedge funds and money managers increase their bullish wagers again over the last week in COMEX Gold. Also, oil prices on Friday, they rose 1%, posting the biggest quarterly rise in a decade, as US sanctions on Iran and Venezuela, as well as OPEC-led supply cuts, have overshadowed concerns over the slowing global economy. Also, hedge funds and money managers, they have raised their bullish wagers on US crude oil to the highest level in more than 5 months, as oil prices climbed 30% over the last quarter. So with that, we'll move over to the charts and we'll talk you through the major levels that we're looking at as we go into next week. So first of all, we're going to start off with the weekly chart here, and we're going to have a look at crude oil. So we discussed this in detail last week, where we were essentially looking at pullbacks as buy opportunities. And again, we've taken advantage of a long position here. In fact, we went long on Brent crude oil last week, banking 100 points profit. On the long side, we've actually got back into another trade on oil over the last week, and we're looking for more upside now as we continue to transition into the month of April. Typically, April does tend to be a strong month for the energies from a seasonal point of view, with an average return of 5.7%. In fact, over the last month, you will note that WTI crude oil delivered a 5.2% return. So we've certainly seen March play out within the normal seasonal tendencies here. So if we have a look at the overall price structure as we go into next week, there are a couple of points to note. One of those, which we discussed last week as well, which you can look at from a technical point of view for buy opportunities, has been very simply retracements back towards the midpoint here of the Keltner channels and also the 21-day moving average. Each time that we are seeing WTI crude oil pull back to that zone, it is presenting a buy opportunity. The second point here is you also have a major previous level of resistance, which is now providing support, residing around the 58 US dollar per barrel level. So we've taken the opportunity now each time oil is pulling back to buy back into this. We've discussed this for a while now. Overall, our view is bullish for crude oil. We've also continued to see hedge funds and money managers, they've raised their bullish bets in crude oil, and it's at the highest level in over 5 months. And we've seen a drawdown too in the number of oil rigs again on Friday to the lowest level in more than a year. Plus, we have the seasonal factor as well as we go into the second quarter, which tends to be a strong time of year for oil as well. So certainly what we're looking for now is the price to drive higher as we continue to progress throughout the month of April. And there are going to be some great opportunities here, in my view, with the energies and also commodities in general over this quarter. But particularly April, you don't want to miss out on some of the great opportunities that April often does provide. Let's just move it over to Brent crude oil as well. So Brent crude oil is lagging slightly behind WTI crude oil at the moment, but very similar in terms of the price structure right now. If we have a look at Brent crude oil on the weekly chart here, you'll observe where we've again got another bullish close here on Friday. We've been making another reattempt to try and break back above that 68 US dollar per barrel level. On higher time frames such as the monthly chart, you'll see very clearly we've got the V-shaped reversal pattern. We essentially put in the lows in January, and we've continued to see follow through over February and March. The first quarter of this year has seen the biggest rise in crude oil since 2009. So it's certainly been a great opportunity over January, February and March to capitalize on this move to the upside. So essentially we've got Brent crude oil, which is up 26% since the beginning of the year, and WTI crude oil, which is up now more than 30%. So I would definitely keep the energies on the radar here. If we then move over to WTI crude oil, you can see as well we broke above the neckline over the month of March here, above the 58 US dollar per barrel zone. We've now closed above $60 per barrel, which we've had as a target for quite some time now with WTI crude oil. As we mentioned last week, we took profits off the table once we had hit that $60 per barrel level, but now we're looking for more upside here as we continue to progress throughout the month of April and into the next quarter as well. So really the next major levels of resistance here for WTI crude oil reside at approximately 63 US dollars per barrel, and above that the next major level would be targeting approximately 65 US dollar per barrel above that. So we're essentially looking at more upside and pullbacks as buy opportunities. We did get a gift last week in the oil market when Donald Trump had tweeted that oil prices were too high and for OPEC to take some action, and with that we saw very briefly this dip lower on Thursday, which really set up perfectly for a buy opportunity to get back in at a lower price. So as we transition into next week and over this quarter, oil should definitely be on your radar. Now, moving over to gold, let's have a look at this on the weekly chart first of all. So we did see quite a large sell-off last week. Turned out to be a bull trap in the sense that we have broken above the weekly highs, and now we've closed and broken back below the previous week's lows. In fact, we've taken out here a couple of weeks worth of lows on gold with this pullback that we've seen certainly over Thursday and Friday. What you want to note as we go into next week is typically the first week of the month, the US dollar does pick up momentum to the upside, especially as we've got non-farm payrolls next week on Friday as well. So what we could see is potentially the dollar pick up strength, and we might see a bit more pressure here on gold and silver until we get past the first week of the month. And then I would look for a recovery to start to take place as we progress throughout April. Normally the month of April is a strong month for both gold and silver, so I am looking for more upside later on in the month. But short term here, if you look at the weekly chart, the overall price action is still vulnerable to potentially another corrective move lower. So if we were to see next week gold roll over, the next major support zone would be $1,280 per ounce. We're hovering just below major support at $1,295 at the moment for gold. But as we go into next week, I would look out for the potential to pick up a position at that 1280 zone if we do pull back to that layer of support. And then I would look within a range of taking the price back towards 1295, and then above that, the 1310 zone. That's the zones that I would be looking for in terms of range bound trade for next week. Gold still, if you have a look at the ranges that it's been moving in so far in 2019, it's finding support at 1280. Definitely we've got resistance coming in at 1325, but I would look at evidence of buyers coming back in at that 1280 level, particularly as hedge funds and money managers, they continue to buy on these dips. So we are seeing them increase their positions each time gold is pulling back. Now, moving over to silver. Silver, very much like gold, does look vulnerable. Again, I'm still expecting the potential for the dollar to rise higher within the first week of the month. We found support at $15. That's a major layer of previous resistance turned support here for silver. If we were to break through that level, though, the next major zone would be 1460. I think that would represent a really good area from a risk reward point of view to pick up some long positions if we were to break down that low. I don't know that we do. At the moment, we're holding at $15. Some traders would look at that as a buy opportunity anyway. The fact that we were previously trading around $16.20 going back to February, and now silver is at quite a large discount to that at the $15 range. But if we do get another pullback and we roll over as we go into next week, I would certainly look at the potential to pick a position up here on silver once we get sub $15. We might not do so. If it holds at this level of support, then we could continue to ricochet between support and resistance and see another revisit within about a 50-point range back to $15.60. Overall, the month of April is normally positive for both gold and silver, but it's just the first week of the month where the dollar tends to be stronger, and that could put a bit more downside pressure on gold and silver until we get past non-farm payrolls on Friday. So we've definitely got the metals on the radar here, wanting to see if we will get further follow through from these layers of support, or whether they need to take them out and break down to the next major support levels, which would likely end up being very good buy opportunities. Very similar situation with platinum here as well. So platinum has closed mid-range here on Friday, mid-range for the week here as well. You can see where essentially you do have this upward trending channel. You've got these high lows on the weekly chart, and we've also got a indecision candle into the close on Friday here as well on the weekly. If we were to break back below the weekly lows, it does then set up for a potential reversal, taking the price back towards the $800 zone, which again, I'd be very interested to look at a buy position on platinum if we did get in that level. My preference is to buy it cheaper as opposed to buy it at a more expensive price here towards the upper end of the range. On the flip side of that, of course, because we have indecision here in platinum, and normally over the month of April it is a strong performer for platinum, if we do continue to drive higher here in price, I would then expect another retest back towards major resistance at that $876 to $880 level. But my preference would be to buy at a lower price here, and potentially even short platinum if it was to break back below the weekly lows. Just look for a short-term play back towards the $800 layer, or very simply just go long the dollar as well. We've still got a long position on the dollar, which we've had for about a week and a half now, which is moving really nicely in profit. So certainly as we go into next week, be aware that it is a new quarter, that typically oil, gold and silver and platinum do perform well over the month of April, but the expectation is the first week of the month we could see dollar strength and potentially short-term lower prices, leading into better entry prices to take advantage of potential rallies later on in the month. Now, if you would like to join us at the Gold and Silver Club and take advantage of these opportunities that we see setting up as we go into the next quarter, then you are more than welcome to make an application to join us at the Gold and Silver Club. As a member, you get access to our exclusive live trading room webinars. You also have access to our real-time trade alerts delivered via WhatsApp and email. You have access to our trading research and market insights, so you have your own individual private members academy website logins, and you are also able to book in and schedule support and one-to-one mentoring. For more information about the live trading room program, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And make sure you subscribe to our YouTube channel. That way you're always kept updated with the latest commodity reports.